Good afternoon. It's Ken of Tortoise Capital with a review of the weekend trading report for July 27th, 2019. Market is in bullish quiet, back into quiet. On an annual and a 10-day basis using the NDX, we're overbought. Green bullish in price relative to the 200. That's the stretch stat. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the boundary between risk on and risk off. It's at 1.065 right now, so we are in risk on, favoring long side swing trading. We take that score, look at the last 5,000 trading days, find the risk Z by computing the standard deviation. And the average, it gives us a Z score of 0.62. You see a 90-day histogram of that indicator here. We got as high as 1.5 Z, coming back into the range of normal. This is still favorable, but there have been some bits of volatility creeping in as we've approached swing highs. So this is in the fall, and so we are respecting our stops, taking measured long side trades, and we're more concerned, I would say, about capital preservation than seizing speculative opportunities. If anything, I would say it's probably evenly mixed. If you could imagine this as a little teeter-totter. When we go in the winter, we are definitely in protective mode and looking for short side opportunities. When we get into the spring, which is rising but below the zero line, that's when we're looking to initiate speculative long positions. In the summer, we're enjoying the growing season, and then when it rolls into fall, we're starting to see volatility creep back in, and so it's time for harvesting and maybe watching for second opportunities. So that's where we are right now. See the blended monthly rebalancing holdings for this month are doing very well. Current leaders as of closing prices on Friday for the various populations. The theoretical exposures, that should read 90%, sorry about that, in ETF2. Quick look at the BMR portfolios. Really good performances in the lagging U.S. indexes this week. Russell and the mid caps. This was very good trades this week. Intraday as well. Latin America lagging. So these were the underperformers starting to catch up in my view. And treasuries, which had had a nice defensive play previous week, were starting to give that back. You know, if the excellent results from this week continue, then I would still look for more value plays to be made inside that area. So I'm going to be watching that close. ETF 32, most still on buy signals. The key leaders weren't really persuasive, except I would say probably technology and staples were fine. But finances, yeah, mid caps and small caps. Dow 30. Visa and Microsoft, the leaders that maintain the strength. Coke might look for some additional strength in here based on 1 week, 1 month, and 3 month. That's moving steadily to the top. Goldman Sachs is part of that strength in financials. I would look for continued momentum in that sector. The broader sector spiders in the U.S. Semis in tech land, banks and regional banks, so it's broad strength there in financials and telecom. Energy still continues to lag. The ETF Max, these are the very liquid ETFs for the world market model. And notice the strength leaders were giving back some this week, so we're seeing a cooling off in gold. That had been a 4 sigma move to the upside. It's only natural to see that being preserved. I think the semis still look very interesting to me. They've been in fuego this month, and they had still pretty good weeks in a week that tech was very good. So let's look for more in there. ETF regional reports at 90 and 10. The U.S. is still better than the globe right now at 57 compared to 46. Inside the U.S., it's tech, large caps, mids, and smalls. You can see smalls still have room to catch up. That's why I really like that as a shorter term swing, and also some intradays. Sector spiders, energy lagging, tech and staples surging. That's going to continue for a while, it seems. U.S. is about evenly split, but favoring the large caps and tech. Mixed bag in Asia, with China and South Korea lagging, but Australia doing pretty well. Gold is at the end of its good run, I think, and Brazil continuing to march, but Mexico lagging. So that's a very interesting pair trade, as described a couple weeks ago during our research weekend with Kim Anderson and her outstanding presentation on pairs trading. If you don't have that home study course, you might be interested in it just for that briefing alone. Looking at the ETF top 30, green and green are the things that are great, and we'd be looking at reinforcing some trend following here with, tech especially. Green and white, still emerging strength here, and you see semis and Brazil are areas where they were good but are now great, so we want to exploit new strength, and these are like the new leaders coming in. And conversely, those that are white and green were great but are now just good, so we're looking to preserve profits and watch for resumptions, possibly in these areas: home construction, growth, home builders, and so forth. Then the daily liquidity stats, average daily dollar volume for the last 30 days. The ones that are green and on this chart are very tradable intraday because they are both liquid and volatile. Shifts into the daily at all-time highs for and the one-day chart closed very strongly. Top of the 10-day, top of the 30-day. Slope is up. The 10 and the 30 are out of the river. The dragon is sloping up. The PSAR's had a nice long run here. Has only been threatened once in the last almost 40 days. That's how strong this move was, and why we pay attention to the PSAR flip and the RLXD, which was telling you to get in around 283, and that's 10 to 12% ago, and a resumption here when the PSAR flip continued. In MACD histogram, we're in the fall, have come through this compressing red river. This is a place to find out if there are legs, and you can see I'm ready to resume upward moves upon the first piece of evidence of improvement, and then measured steps all the way down. So this blue line, this Monday opening, we've been following that now for a couple months, and I kind of like it that the opening on Monday seems to have some utility in describing the kind of a week it is for swing traders. That if price remains that day above Monday's open, then it's still been a pretty good week, and so you saw how that unfolded this week. A strong week all the way through. Even the sell-off didn't last very long. Whereas the previous week, the open was here, and then all the price action was below that Monday opening. So that was kind of a weak week, if I may say it that way. Sorry. So we'll be waiting to see Monday's opening and get that new blue line and use that to help us describe the kind of shorter-term swing market that it is becoming. But for right now, all systems go with care. Latin America on a overreaction signal to the long side. You can see the 10-day max pains. Many dojis on Friday, a couple channelings. Lots on the auto framer to choose from, including some old reliables like Boeing and Caterpillar and Johnson & Johnson, which test out very well, and which have volatile ATR percentages, so they're going to be excellent for intraday as well as swing trading. Boeing especially good since its RSI2 is in single digits, and it's been so horrible for one day, 10-day, 1 month, 3 months, so it's just been lagging the Dow the whole way, and even had breakdowns of closed at 10-day and 1 month lows. So it's so bad that it's good. I'll be stalking that one carefully. for both day and swing trading. And then notice just Microsoft and Goldman Sachs quietly getting it done. No signals, no symbols, no auto framer, nothing. It's just outperforming and had breakouts on the 10-day, 1 month, 3 month, and 6 month time frames, as did Goldman. So the absence of measured information here is telling you something about the quality of those symbols. ETF 30, lots of dojis. Latin America on a channeling and an overreaction. Breakdowns in XOP. And so energy has been really bad, as you can see. And I like when Mexico suffers, that sets up nice conditions for reversion to the mean trades. Had breakouts here in the S&P, the Qs, and XLF across the board. That's where the gains are being made as the market just keeps shaking off bad news. And the silly season in politics doesn't seem to be affecting markets much yet. Many super pinches to choose from. I like that energy, Latin America, Pfizer, Chevron are all in that mix. They're going to make some great swing trades, so we'll be framing those later in the weekly FAQ call. Daily pinches and daily stretches, so you can see how many z-scores above their Bollinger Band mean they are and the percentage move, and the ones that are deeply below. The most expanded pinch boxes, these are the ones that are exceptionally directional based on their history, and you see just how many compressed pinch boxes there are near this all-time high. I love that market condition for hybrid trading, the swing trading, core and turbo techniques. These are all candidates for that. Many auto framers to choose from. Johnson & Johnson, interesting here, is almost 4-1 below its long-term fair value. Boeing up 2.5. Natural gas almost 6. The ones that are beyond their fair value, this is number of ATRs, so EWT and EWA, more than 9 ATRs beyond their fair value. Apple, IBM, GE, all well advanced. That's an example of profits we want to be preserving, but also this is a quick, fast, and in a hurry way to find relative strength leaders. Daily squeezes, so two of the guys from the research weekend are going to be taking a look at this in a systematic way to look at swing trading one day at a time, looking at these candidates and seeing what we can get with hybrid frogs to get started and mechanical entries to get started into swing trades, and see what that looks like for one-day good moves that can be harvested almost like popcorn, and then see what percentage of those mature into tradable swings. So looking forward to that research report. Some interesting swing targets. These are all in their spring seasons of MACD histogram on a daily, and how far below the midpoint of their red river they are. So Verizon is especially deep. So we'll be looking at that, and this is the ETF 30 on that same one based on the seasonality. Right now, I think I like the summer, like the Russell mid-cap has just crossed the zero line and is still well below its red river. So that's a rebound after a kind of a harsh sell-off, but it's above its zero line. So that's going to be one that's very interesting to me, MDY. Blue line is the regression line slope. Still powerful, all-time high. Still room at the stretch stat for this to continue to go. It's one leg, 2 legs, just we're in the second part of that leg. And now if this slope of the regression line can cross back over its 10-period moving average, which is the black line, then that's going to be a very favorable move for a second swing, in the same way that this, it crossed back here, and we got a nice move up into this region. So this is just another long-distance freight train continuing to march. So these long legs can last a long time in the S&P, especially when there's no other reasonable alternative. Volatility at near historic lows. And the slope stat has recognized how strong this market has been. It's one of the top 10 performances of the last 30 days. That's why that RLXD is so important. The 90 has sloped up, the 30's finding support, and the 10 is on its way back up. This is getting ready to leave the station. The last time it did this is so you had the 90 and the 10 near the zero line, and the 30 positive was, I would say, like right about in here. This is about that region that is the nearest neighbor, and you can see what it did. It gave another 10, 15 bucks in that grind at a place where it would have been logical to fail, but it held support and continued. So that's, to me, the nearest neighbor comparison. So that's Cantor's Capital with the review of the weekend trading reports. Lots to think about, many trades to frame. We will see you in the chat room. Keep your risk measured and powder dry.